dealing with Britain's borders after Brexit, the government is also seeking to keep the economy on track. Dire warnings of the effects of leaving the EU before the referendum have, so far, not come to pass, with new figures today on services and the housing market more buoyant than expected. Retailers have called it Christmas in July. Sales in London's West End rose nearly 5% last month. High streets across the UK also boomed. Here, the post-Brexit bounce has been driven by the lower pound, tempting in tourists from China and the USA.
There has been an uplift in sales, the pound valuation has helped that, but certainly retailers think about next year and the year after, the issues around pricing, what's going to happen to the currency, these huge negotiations we have to do around trade and tourism and capital investment. So I think it's a cautious welcome for the summer spike, but certainly not that confident going into next year.
That view that things are okay now, but doubts about the future remain, is repeated by other businesses. So in today's CBI survey of service companies, 22% said business volumes were up post-Brexit, while 20% said they were down, cancelling each other out. But the same survey showed just 10% felt more optimistic about the future, while 40% said they were less optimistic.
Obviously there's a lot of uncertainty about what it means, which is what you see the hit on optimism from. And yet, there is no Brexit yet. Companies and consumers are still carrying on.
If business uncertainty about the future spreads to households, that would spell real trouble for the economy. Figures showing mortgages approved to buy a house falling to an 18-month low suggest it's still too early to conclude all the Brexit risks are now behind us.
Well, in the